The dream of home ownership in this country has all but evaporated for many people. Real estate activity is at an historic high. Royal LePage predicts home prices will surge 15% in the fourth quarter of 2022 compared to the same time last year. Mike Drolet looks at whether efforts to cool the hot market will work.
Is the red-hot real estate market cooling or just taking a break? The Bank of Canada hike in interest rates appears to have had the desired effect. Homes that were seeing 15 to 20 offers are now seeing fewer than 5.
Before, anything under $2 million was kind of flying off the shelf. Now, again, it's not showing well and it's not super appealing to the consumer. It's not getting the same amount of attention it was even 2 months ago.
Make no mistake, it's still a seller's market. The number of homes available remains historically low. Coupled with high demand, you can see how the agent for this Toronto semi wrote in the listing, "Floor is damaged. Please watch your step. The property is gutted to the studs," and still sold it for $1 million or $100,000 over asking. It's been a long time since houses were considered affordable, with the last few years showing prices on an even steeper upward trend. However, the Canadian Real Estate Association reports the average home price fell 2.5% in March to $796,000, $633,000 if you exclude the red-hot Vancouver and Toronto markets from the equation. But 1 month does not make a trend, and when compared to last year, prices are still up 11.2%.
There is a lot of mixed signals, I guess, or a lot of different ways in which the data can be interpreted. But I would say overall, it does paint a cooling price picture, but certainly not one that's would flag a significant decline in prices.
And this is where policymakers have difficult decisions ahead of them. Economists expect the Bank of Canada to hike rates another 2% before the end of the year. And while that should cool the market even further, it could have a detrimental effect as well.
The enemy of the real estate market is not higher interest rates. The enemy is rapidly rising interest rates. If for some reason, because of inflation, the Bank of Canada chooses to raise interest rates very, very quickly, as the market now is predicting, that can be more difficult on the housing market to deal with.
So the choice appears to be either lower prices or higher interest rates, or possibly a combination of both, none of which lead to a more affordable housing market. Mike Drolet, Global News, Toronto.
In the last budget, the federal government identified housing speculation as a contributing factor to rapidly rising home prices, and it declared a 2-year ban on all foreign investment in residential real estate. How that will be implemented is not clear, and it won't impact Canadians who are buying up property as investments. As our chief political correspondent David Akin reports, dozens of members of Parliament are among them.
The post-budget message from the Prime Minister was clear.
When foreign investors and corporations use housing as an asset, it drives prices higher and higher and makes homes out of reach of the middle class. Homes are to live in, to raise a family in, to build a life in, not a way to boost a balance sheet.
And yet, dozens of his own MPs have purchased housing units not to live in, but as an investment to boost their own balance sheet. A Global News review of MPs' filings with Parliament's Conflict of Interest and Ethics Commissioner finds that at least 65 MPs from all parties, including 42 members of the Prime Minister's Liberal caucus, hold rental or investment real estate assets. There is nothing illegal about MPs owning investment properties, so long as those investments are disclosed to the Ethics Commissioner. And in fact, a Bank of Canada study found that investors, a vast majority of them Canadian, account for 1/5 of home purchases in Canada.
What we're cracking down on is the fact that there are foreign investors and big corporations that buy homes in Canada and then just let them sit.
Housing affordability experts, though, say there's not much difference in the behavior of foreign investors, corporate investors, or real estate investment by everyday Canadians, including MPs and ministers.
They're thinking that the financialization of housing only happens at this sort of big corporate level. But what your data about the number of investment properties held by cabinet ministers shows is that it also happens more at the regular everyday person level. And that has been the key point for Jen Squeeze.
And there could be more MPs who are landlords. The post-election disclosure statements for 91 of the country's 338 MPs are still being processed and have not yet been published. David Akin, Global News, Ottawa.